Speaking about wages, well, the March quarter wage growth figures have just been released and they have lifted at an annual rate of 3.7%. Joining me now is business reporter Edward Boyd. So the annual rate, stating the obvious here, it's below inflation but higher than expected.
Yep, below inflation, which was 7% at an annual rate in that same period, the March quarter. But yeah, the expectation was that an annual rate wages growth would be 3.6%. It's come in slightly higher than that at 3.7%. But the quarterly expectation for the March quarter for wage growth was actually 0.9%, and it's come in at 0.8%. So it's undershot on the quarterly numbers, but overshot on the annual numbers. We've got the stats we can put up on the screen for you, but basically these are pretty important figures that the RBA looks at very closely. You can see here private sector wages in the quarter were up by 0.8%. Public sector a little bit higher at 0.9%. And some of the biggest industries for wage growth in that quarter was education and training, where their wages lifted by 1.5% over that period. If we go to the next page, we can look at this chart showing the wage price index over the last couple of years or so, and you can see wages have been languishing at very low levels for quite a long period of time, but now they're up to 3.7%. Which the Bureau of Statistics today said is the highest level since roughly September 2012. So wages have lifted to their highest level in more than a decade. And coincidentally, Tom, the last time wages were this high, the cash rate was also above 3% as well. So we've got a high cash rate now. Back then, about 11 years ago, we had a similar story for the economy. Wages were growing and the cash rate was at a high level too. So these are important numbers, obviously, that the RBA will look at very closely. They're expecting wages to creep ahead to 4% by the end of this year. So there's still a little bit more headroom to go here for today's wage figures, Tom.
And when we weigh this all up, you mentioned the RBA decision. There's today's data, which is kind of mixed news, right? Because it's above on an annual rate, but lower in a quarterly rate. And the quarterly is the most recent data. Then there's unemployment as well, as it weighs up what to do in terms of its next rate rise. Is it sort of still very much up in the air, do you think?
Look, yesterday there were a few economists saying the June meeting is live. In other words, there's a chance the Reserve Bank can lift the cash rate. But I think after today's figures, we can put up the ASX 200 market reaction actually on the screen. We can see what's happened to the stock market. The market was down about 1% earlier today. It fought back a bit to be down 0.5%, and you can see it's kind of languishing at around that 0.5% level. So there hasn't been much of a stock market hit after the wage numbers today. Obviously, if wages growth was a lot higher than expected, then the market would think the Reserve Bank would need to lift rates again next month, so we would see the market fall a lot, but it hasn't fallen much. So there has been muted reaction here on the shares front. Tomorrow we do get those April unemployment numbers. We're expecting to see unemployment remaining at the near record low levels of 3.5%. Roughly 25,000 jobs are expected to be added to the economy during April, keeping unemployment at 3.5%. So those are the two key data figures that the RBA is going to look at when they make their rates call next month. There's 3 weeks away before the next Reserve Bank board meeting. I think we're going to see the RBA hold rates at least for the next couple of months. Some economists do believe we'll get 1, perhaps 2 more rate rises later this year. But at the moment, I think, Tom, we're going to be on hold.
We love a prediction here on Newsday. Ed Boyd has marked his. Thank you.